Good evening, folks, and welcome to the Rahul Nair Finance Show. You're listening to the Daily Deal Room, from startups to stock markets, where we decode the business buzz of the day, crisp, clear, and to the point.
Today is 8th September 2025. Before we begin, here's a quick disclaimer. This podcast is for educational purposes only. It is not a buy or sell recommendation. Always consult a financial advisor before making investment decisions.
So here's a quick look at what we've got on deck. We'll kick things off with how the market's closed, then jump into Swiggy's latest move. After that, we're talking about a massive global gold rush, a huge IPO from PhysicsWallah, and an update on tech layoffs. We'll wrap up with some positive news on India's foreign investment and a rebound in startup funding. Let's get into it.
All right, first up, let's check in on the markets. So the markets had a pretty wild ride today, but managed to end with some tiny gains. You can see both the Sensex and Nifty just barely in the green. But you know, the real story is in the sectors. Nifty Auto was on an absolute tear, surging over 3%. On the flip side, the IT sector really took a beating, closing down almost a full percentage point. A real mixed bag out there.
Next up, a big move from a household name, Swiggy. Swiggy is making a very smart play right before the festive season kicks off. They've just launched Giftables, which is basically an instant gifting service. They're betting big that people will love the convenience of sending curated gifts with that classic Swiggy speed. It's a clear shot at grabbing a big piece of all that seasonal spending.
Okay, now for a story with some huge global implications. Let's talk about gold.
You know, something really fascinating is happening in the world of finance right now. For the first time in nearly 30 years, central banks around the world now hold more gold than U.S. government bonds. That's a huge shift. So the big question is, why? What's driving this?
Well, it really just boils down to a simple risk calculation. On one side, you have growing worries about America's national debt and, more importantly, the risk that your assets could get frozen because of political sanctions. And on the other hand, you've got good old-fashioned gold, a physical asset you can hold that can't be switched off and that has been a hedge against inflation for centuries.
And we are not talking about a small change here. The scale of this shift is just massive. Central banks have been snapping up over 1,000 tons of gold every year for the past few years. As global tensions rise, treasuries just don't feel as safe as they used to. Gold is now being seen as the ultimate politically neutral insurance policy. And get this, almost half of all central banks are planning to buy even more.
And you can bet India is a huge player in this global gold rush. The nation has seriously beefed up its reserves to 880 tons. Gold now makes up a solid 12% of the country's total reserves.
So what's the bottom line here? For India and other countries, this isn't just about shuffling assets around. It's a very deliberate strategic move to make their currencies more stable and protect their national wealth from global shocks. In a nutshell, it's about building a financial fortress in what feels like increasingly uncertain time.
From global reserves, let's switch gears and come back home to the IPO market, because a giant in the EdTech space is about to make a huge splash.
This is a massive moment for the Indian EdTech sector. The unicorn PhysicsWallah is going public, filing to raise an incredible 3,820 crore rupees through its IPO. This is going to be one to watch, for sure.
So what's the game plan? Where's all that money going? Well, their filing lays out a really clear strategy for some aggressive growth. Look at this. The biggest chunk, over 700 crores, is going straight into marketing and brand building. They're also making huge investments in new physical centers, and of course, beefing up their tech.
And if you look at their books, you can see why they're feeling confident enough to go public. Their revenue shot up by nearly 50%, which is amazing. But check this out. At the same time, they slashed their net losses by almost 80%. That is impressive. And they're still in acquisition mode, taking a stake in Sarthi IS to push into the UPSC coaching space.
All right, now for a look at the more challenging side of the tech world, and that's the ongoing story with layoffs.
Yeah, the new age tech sector is definitely still navigating some choppy waters. So far this year, these companies have laid off over 5,600 employees. It's really a mix of things causing this. You've got regulatory issues like the ban on real money gaming, a big push towards AI and automation, and just this constant pressure from investors to cut the burn and finally get profitable.
But while some parts of the tech scene are facing challenges, the bigger picture for India's economy is looking pretty bright. Let's talk about the surge in foreign direct investment.
Okay,
This is where the story gets really impressive. In the first quarter of this fiscal year, foreign direct investment grew by a solid 15%. But the real headline here is the United States. They've nearly tripled their investment, pouring in over $5.6 billion to become the top source of foreign capital into India. That's a huge vote of confidence.
And where is all this money flowing to? Well, no big surprises here. Karnataka and Maharashtra are just soaking it up, with each state pulling in over $5 billion. It's a testament to their powerful tech and financial hubs, which continue to act like magnets for global investment.
Look, here's why this matters. This FDI surge is a clear signal of deep global confidence in India's growth story. This isn't just a number on a spreadsheet. This is real capital that's going to fuel expansion, build companies, and create jobs, especially in those high-growth digital and tech sectors.
And finally, let's see how that confidence is playing out in the private markets. It looks like startup funding is making a comeback.
After a bit of a dry spell, funding is back in a big way. We saw a 90% jump last week alone. Indian startups pulled in over $186 million across 20 deals, which shows that investors are getting active again and are feeling optimistic.
And this rebound wasn't just a bunch of small deals either. It was led by some major funding rounds for companies like the social commerce platform CityMall and the upskilling platform Seco. It just goes to show you that smart capital is definitely flowing back into ventures that show real promise for high growth. That wraps up today's episode of the Rahul Nair Finance Show, brought to you under our daily series, The Daily Deal Room, from startups to stock markets. If you like this episode, don't forget to like, subscribe, and share with your friends, colleagues, or anyone who's into business and investing. We'll catch you tomorrow with more updates. Until then, stay curious, stay invested.